Profit First is a system to use to manage both business and personal finances that is very, very effective. So Profit First is a book by Mike Michalowicz. It's a system that he introduced to pay yourself first as a business owner in that context. You can also use the same in the personal side of your household expenses, and I'll show you how to do that. But the premise of Profit First is to have set percentages for your pay. So income comes through the door, or revenue for a small business owner comes through the door. We have set percentages that are predetermined and are strategically assigned to decide where those dollars are going. So I'm going to walk through a business lens, how to look at Profit First and implement it. And then the personal side, how to look at Profit First, maybe, and translate that and implement it in your household. And then I'm going to walk through our personal Profit First system that I'm using as a business owner that is feeding into our household, incorporating my wife's income and how we're parsing out income from there as it comes through the household and into our checking account. Let's first go from a business lens and walk through just basic Profit First principles that Mike teaches in his book. Okay, so starting from a business lens, let's look at this, how this would work. So income comes through the door, revenue. This is revenue, comes through the door. From there, what Mike proposes is that we set first, before we do anything, a certain percentage of that income to the side that's going to be for profit. So we want to set 5% for profit. Some people might start with 1% if they aren't profitable yet or they're not taking anything out of their business. But the idea of this system is to think about it from this lens that we're going to put aside profit first. And we need to figure out how to not only live on the rest for our household when we get to owner's comp, but also the big one, OPEX, making sure we're not overspending and over reinvesting back into our business. The business needs to serve us as the business owner. So that's kind of the lens we're looking through this with. So OPEX, an example of a percentage for that, might be something, just depending on what field you're in, might be something like 50%. Okay, so that would be operational expenses for your business. This is software subscriptions, if you have to pay vendors, if you have to, pay overhead, whatever that may be. We could break out that OPEX account into several different accounts: payroll, maintenance, supplies. Like we could break that out every which way, but these are the broad categories and the 5 accounts we want to focus on. We can get more detailed depending on what business you're in. Okay, and then tax. Again, this depends on your tax bracket, unique individual situations, but 15% is a good round number. Remember, this is 15% of income. You don't pay tax on income, you pay tax on revenue. You pay tax on total profits, okay? And then that would leave 30% for owner's comp. So this is what we're paying ourselves as a salary, just depending on if you're an S Corp or a LLC, just sole proprietor. You will be paying yourself from W-2 wages if you're an S Corp. If you're just a sole proprietor, this is just what you're taking out of the business, transferring to your bank account. Okay, so from here, now that we have this framework, how does this work in practice? Well, ideally, we're setting up automations where this is happening automatically. So I like to do this personally in Relay, relayfi.com. Really great system for managing business cash flow. But ideally, we're setting this up and we're letting this run. And this will dictate if we're able to make investments back into the business. So if I'm spending 50% of my revenue on OPEX and I have a shiny new software or toy that comes along, well, I'm going to have to go back to the drawing board and quite literally change my total picture here and my profit percentages and everything to be able to afford that if I'm already at my 50%. So what this does in practice is to go spend more on the business or to take more out of the business profit-wise, we need revenue to go up. It has to go up. So it's kind of forcing us. We're setting, we can look this up. It's all over. It's in the book. We can look up industry standard benchmarks for this stuff and see, what percentages we should be spending on operational expenses versus taking out of the business as profit. Okay, so let's look at this now from a personal standpoint, personal household standpoint. So income that comes through the door, that would be from your paycheck. So let's assume taxes are already taken out. So tax would be over off to the side. That's happening before. Now our 4 accounts below that income, what are the 4 things? Generally, there's 3 things we can do with money, but there's 4 things in this context, and I'll show you why. So there's going to be savings, fixed spending. So that's mortgage, debt. We've got things that are fixed. Maybe that's bills. We could even put like our utilities. We could maybe put our cell phone bill, things like that in that bucket. Flex spending, I like to call it, or discretionary spending, where we have to actively swipe our card, make a decision to buy that grocery, go out and shop, go out and go to restaurants. And then there's non-monthly spending, which is going to be that vacation fund, large purchases, things of that nature. So let's break out our income. Let's say we want to save 20% of our income, which is a really good goal. Our fixed spending, we don't want any more than 30%. Our flex spending, we would have at about 40% typically. And then our non-monthly spending at about 10%. This is a little bit harder to do if you don't have automation or some way to parse this out. This can be done kind of by reverse budgeting, almost by making sure we're automating the savings, we're automating the fixed spending, we're automating our mortgage payment, we're automating, our 401k contributions, our taxable brokerage contributions, whatever it may be. And then, we're automating this non-monthly. So really, if we're doing that, the only thing we have to worry about is making sure we don't spend more than 40% of that paycheck on the flex spending. If fixed is automated, savings is automated, and non-monthly is automated. But what this is doing, again, we're taking the profit first. We are forcing ourselves to save and pay our future self first, which is counterintuitive. Many people don't do it. That's why many people don't retire with lots of money, because they don't do this part. They use the flex spending, the discretionary, that's what gets used first, and everything else comes after. So again, profit first, automation if possible. But again, how do we save more, or how do we spend more? How can we go on that trip that maybe 10% doesn't afford? Well, we got to make more income, or we have to get a lower debt rate. So again, it gives you a framework for not only automating and taking the human elements out of this, but going off percentages and making it so we have a framework with which to work around and to make decisions around if we can afford this, or if we can't afford this, or if we can afford to put more money away towards retirement, or if we can afford to step off the gas pedal. So profit first is a really, really useful framework from both a business and personal standpoint. Okay, so now that you understand how these systems work and how they work together, I'm going to walk you through exactly what I do as a business owner and how we're allocating our money in our household with these percentages, incorporating both business income as an S Corp and my wife's income that is coming from her W-2 job. So income on the business side, profit, 27%, OPEX, 28%, tax, 7%, owner's comp, 38%. These are the profit percentages that I currently have in that business. And it's something that I've increased over time with that profit. I started really small. I started with that 5%. My business wasn't profitable from day one. It had to get to start turning a profit. But once it did, I can increase that profit margin. And I actually start to pay myself in 2 ways as an S Corp owner, both from owner's comp, which is going to be a W-2 paycheck, as well as a profit distribution that are coming from the business now into our household. So now that we've gone over the business profit first, let's go down to the personal and I'll show you what we're doing there. So we have 3 sources of income: profit distributions, owner's comp from the business coming in on payroll, and then because I'm an S Corp, and then a W-2 coming from my wife's job. So we have 3 sources of income coming in at the income level. From there, we've got our profit first saving percentage at about 40%. That's going to Roth IRAs, backdoor Roth IRAs, that's going to TSP, that's going to high yield savings accounts, depending on what we have going on. Fixed spending, we don't have any debt other than a mortgage, so that is 10% to fixed spending. That is automatic, so both of these are, for the most part, automatic, don't have to think about them. Flex spending, so that is discretionary. We actually have to think about swiping a credit card. 35% to flex. And then non-monthly spending, that is about 10%. And we've automated that as well going to a separate account than our checking account. So we have automation here in the non-monthlies, automation here in the fixed with the mortgage, and then automation here in the savings. So the only number we really need to be concerned with is that flex spending number. We also have a fifth bucket here. You'll notice that doesn't add up to 100 to pay estimated tax on these owners distributions. So that's about 5% of income. So you're going to see that coming from this tax account up here in the business all the way through down in to pay this tax to the IRS. That's an S corp business owner, little nuance there. But you can see we've set up a system here that is going to grow with us. It's going to tell us if we're spending too much, if we have money to allocate, if income grows, if business income grows, well then profit distributions are going to grow. I'm going to have to increase my owner's comp. What is that going to do? It's going to increase our take-home income in the household, which is going to allow us to either spend more here or save more here. So it's a system that's allowed us to merge together both business and personal finances in a way that makes sense. They're responsible. We can review this on a monthly basis. And when possible, we can automate these processes. So to wrap it all up, Profit First is an awesome system, not only to manage business finances, if you're a business owner, small business owner, even if you have just a little Etsy shop, no matter what you have on the business side, super, super powerful, highly would recommend, but also on the personal household side. So for everybody's got household expenses, household finances to manage, whether you're a business owner or not, using this system or a system like it, where we're being super intentional about the percentages that we're setting aside from our income and why, and kind of benchmarking those to see if they make sense. Is our debt rate healthy? Is our savings rate healthy? We want to look at this in a context of where is this money going? Is it automated? How much can we remove from the decision-making process? Can we remove ourselves? So if we can automate our savings, if we can automate our fixed payments, if we can automate our non-monthly payments to things like travel, things like a car fund for your next car, things like a down payment on a house, then if we can just focus on that one number of discretionary spending, it's going to make managing our household finances a lot less cumbersome, and it's going to lead to better outcomes because we know we're setting a healthy profit first, savings percentage aside first before we're getting into going out and spending. We can now then feel free and feel better going out to dinner, going on trips, going to do things because we know we're saving 20% of our income. We know we're saving 30%. We know we're saving 15%, whatever those numbers are for you and your personal financial situation and goals. So I hope that this was a super helpful overview of Profit First, what the system is and how it applies to both business and personal finances, and how you can use these in conjunction with each other across personal and business. Let me know if you have any questions. Really appreciate you being here, and we'll see you next week. Thank you for joining us today. Do you want the exact financial planning framework that I use with clients? Go visit baskinfp.com where you can grab a free download of the ultimate military and veteran financial checklist to give you the bluff on what you need to be doing to manage your finances. We'll be back next week with some more content to help you on your journey to financial freedom. See you then. This is a friendly reminder that the Bluff Finance Podcast is general and educational in nature and does not constitute tax, investment, legal, or financial advice with respect to any particular individual or taxpayer. Please consult with your own tax, legal, financial, and other advisors regarding your own unique situation.